Hi everyone, let's take a look at how to construct a balance sheet. So first we're going to need the information. I have some options here. I would advise to open it up in Excel. Once that's downloaded, you can bring it over and you'll have some numbers here. Now before we start to input any of these numbers into the balance sheet, first we're going to identify and organize the information and make a rough version of a balance sheet. That's going to help us inputting the numbers. So first we want to figure out, is the account a liability or an asset? So is it an asset, is it a liability, or is it considered equity? Once we figure that out and then we know that it's either an asset or a liability, we want to know if it's current or if it's fixed or long-term. So first thing we're going to take a look at is the accumulated depreciation. Now, assuming we've already read the textbook, we might need to reference it still. This might be a tough one, so we're going to open up the text. And if you recall from the textbook, depreciation should be part of our long-term assets. Typically, it's part of when we have property or equipment that depreciates, we have to account for that. So if we take a look at our long-term assets here, we see that we have to account for depreciation. So it basically represents the depreciation or reduction of the value over time. So it is considered a long-term capital asset. So it is an asset, a contra asset or a negative, and we know that it's long-term or fixed. Okay. Accounts payable, well, that is a liability. That's something we actually have to pay. And it is a current account because we have to pay within the year. Accounts receivable is the opposite. So for us, it's an asset. Okay, it's coming to the company. And it is considered current because it's going to be paid within the year. Cash, of course, is quite current, and it is an asset for us or the company. Common stock is considered equity. Inventory is an asset, and it's also considered current because ideally we'll be selling that inventory within the year. Long-term debt, well, it's considered long-term or fixed, but in this case we'll consider it long-term. And it is a liability, so we'll call that a liability because we have to pay that off. Plant, property, and equipment, as mentioned with accumulated depreciation, that is an asset and is for the long term or fixed. And finally, return to earnings is considered equity. Oops. So now that we have identified the accounts, we can go ahead and organize them. So we're going to try and roughly organize it, making it look more like a balance sheet. So we'll put our equity down here. Next, we're going to take a look at our liabilities. So we'll start with our long-term liability. And then we have our current liability. And finally, we have our assets. And again, we want to organize it a little bit. So we want to stick with our fixed assets. And then we have our current. Now, we should be organizing it in terms of liquidity. So our cash will be above most liquid. And typically accounts receivable is next because we hopefully be getting that cash. And finally, our inventory, when we sell it, will be considered liquid as well. So now that we've organized our balance sheet, we can start inputting our numbers and our accounts here. So we'll start with our cash. Then we have our accounts receivable. And we have our inventory. So those are our current assets. Let's get our values. Remember, we're looking currently at 2016, so we're just going to go ahead and copy those in. And now we need to figure out the total current assets, so we'll simply add those up. So that takes care of our current assets. Let's take a look at our fixed assets. Again, we have our equipment, and then we have to account for the depreciation. As you can see, it's a negative, so that's going to remind us that we want to deduct it from our assets. So it's a negative value. So we have our property and equipment. Then we're going to have this subtracted. So when we do the math, reminder to subtract depreciation. That's going to give us our net. Okay, so it's actually an account for that specifically. So that's the net subtracted the depreciation. And finally, we want our total. So for our total assets, let's see if we can maybe get a little space here. We're going to take our total current and our fixed, and then we can put that into here for our total assets. So now we can move on to our liabilities, starting with our current liabilities, so the accounts payable, and then we have our long-term debt. So accounts payable, and they're going to ask again for our total current liabilities. In this case, there's just one, which is the accounts payable. So we're going to just add it or enter it again. And then we have our long-term debt. And we need to total those up. And finally, we have our equity. So our common stock, returned earnings. So common stock value, move that over here. Returned earnings. We need to add our total. Total owner's equity. Okay. And finally, we add the total liabilities and total owner's equity. Hopefully it does balance. So let's see if it does. So long-term debt plus our equity. Looks good. Okay, we can check our answer. Hopefully we get some words of encouragement. Wow, very encouraging, wonderful. And then we move on to 2017. Now, you might think, oh goodness, I'll have to do all these calculations again. Not quite. Don't forget you are using Excel, so you can use your autofill and you can get your numbers that way. Okay. And again, hopefully it does add up. Looks like it does. Oh, look how much easier it is to complete 2017. There you have it. For the rest of the questions, just make sure you reference the textbook. Particularly this equation will help you. Thanks for watching and happy financing.